Take a look at disclosure before we get into today's public morning call. It is 7:56 on 11/14. That is 7:56 on 11/14, and we were going to do a morning call in just a moment as I get my charts all lined up and get ready for the action of the day, if there will be action of the day. So once again, take a look at today's live morning open call. Okay, here we go. I'm going to get right to it once you read the disclosure. So my name is Scott Redler, Chief Strategic Officer at T3Live.com. I've been getting a lot of requests to show what the morning call video looks like. I've been doing some midday videos for everyone. So every day I do get up at like 4:45 and I do tweet to Redler All Access what's happening around the world. I like to look at what's happening around the world to see what the sentiment's like, and then I see what the futures are doing to see if some things are impacting our trade, to see if the trade changes, to see if the trade stays the same. So this way I know how to maneuver my positions that I've been holding. When the S&P is above the 8-day moving average, which I'll get into, I like to be in a portfolio approach. We've been in that for over a month. What does that mean? That means I'm long anywhere from 4 positions to 20 positions, depending on the day, depending on where we are as far as the chart, whether the oscillator is plus 40 and it's time to put a hedge on, or all of a sudden we're back to neutral and we're trying to figure out, can we add more different types of longs as the trade evolves. Recently this week, I've talked about the 8-day moving average. We've opened lower twice. A lot of people are talking about the rally being over, between the impeachment hearings and the China trade stalling and Brexit, whatever you want to call it. There's been a lot of banter. I like to know what's happening, know what the buzzwords are, but I'd rather look at the chart. So at this point, futures are down a little bit. So this is what the morning call looks like. What I do is I go through lots of sectors, lots of names. I update my positions. I update strategies. I show you some things that, we've been looking at, some things we've been riding, and why. So it gives you a little bit of an education as well. So if you go here to the S&P chart, basically right here, just so you guys know, you've seen this chart. I've always posted an S&P chart on the public Twitter feed as well. Remember this gap up? Well, this was the gap up that pretty much ignited my new portfolio approach. From here lower, we were in a little bit of a corrective phase below the 8-day, below the 21-day, and then you had a potential start of a new active sequence with this red dog reversal. And then right here, we got tight. And then here we gapped above the moving averages at 29.62-ish. Okay, and then here we held it, showing some power. And typically when you gap up and you hold it, you go in the same direction of that gap up. With that being said, a little work in the background, that's when I decided to see what's showing the best relative strength, what names should I be in, what names can I use a tier system with, and then the VTF looks at those positions. They see me actually manage them live, take them on, take them off, add to them, subtract to them, and then hold them. So hopefully that gives conviction to other traders in my community to sit in some longs and trade around them and find great patterns to actually even make some cash flow. So from here all the way up, look at that, 3102. Every single time we tested this little blue line, we held it. Okay, so this 8-day moving average, which means we're in a strong trend, it just had its birthday, right? It was just a month. So a month we've been sitting in this and we've been trading around it, adding to it, taking it off, etc. Every now and then I'll be long the SPYs with my positions, and every now and then I'll put the SPYs on as a hedge. Whenever you're like extended from the 8-day or extended from the 8-day or extended from the 8-day. I'm actually still in a small hedge, but I'll probably cover a little bit. And at this point, this week I talked about 3,073. Can we hold it? Because that around here was the 8-day and we've been holding it all week, going sideways, digesting. So if we are to see lower prices, which all the bears have been talking about for months and weeks and years, whatever it is, the only way you could start is a close below this, and then you have the 21-day down here. But at this point, the longer we stay above 3,073, perhaps the higher the probability we get above and stay above 3102, because a lot of the bulls are saying, hey, the measured move of this huge channel that we were in for so long between 2,800 and 3,000 is 200 handles. So that means the measured move is 3,200, which could happen, and it feels like it's going to happen. But in order to get there, what do you have to do? The only point of reference we have is 3102, so it's got to get above and stay above that. So right now the S&P is going sideways. The oscillator is negative, so we're not overbought. So now the question is, what could help be a catalyst to take us above that high and continue, and we have to keep managing our trades. So the Qs have been very strong. Look at this gap up that held. This is when this active sequence was born. Okay, above 190.65, and then pretty much above the 8-day ever since. Hasn't even touched it this week. 202.21 is the recent all-time high. Yesterday, it made a low of, 200.71. So, we're probably above that. So you can't get too bearish if we're holding 271. And even if we break 271, the 8 days down here. Some guys that are very active might say, hey, well, look at this ascending channel here. If it breaks it, it could mean lower prices, and that's the truth. It could, and we'll see if that's the case. That would give you a little bit of a void right here to get down to 199.54, and then here's your 21-day. But at this point, it's still trending, and this is a very accelerated trend. Active traders do maneuver a very accelerated trend because we're sitting in front of our computers all day, and we could really act fast. Those of you who trade more of a swing, you give things more room. So this way, when you get some tweets, you don't get stopped out of positions because they're too tight. So tech is still acting well. The IWM, I'm trying to stay with it. Why am I trying to stay with it? Because, I do see this overall big channel like everyone else sees it. It is a very big channel. And if it were to take out the high end of this channel, chances are there could be a tradable move. And that could help fuel the next leg of the ultimate bull run we've been in, but it hasn't happened yet. So if you anticipate it, sometimes you can get hurt, or sometimes if you anticipate it and you do it in a calculated fashion, you have good prices, so you're not just buying a breakout, you're long verse levels too. So anyway, 161.11, it got above this. This was the recent high. So I am long some IWMs, not a whole lot, because right now it's trying to prove that there's commitment to this move off the lows. Okay, yesterday was a little faulty. Thank goodness it made a low fast, so I didn't even have time to get stopped out. But my stop was 157-ish anyway. So anyway, now you have 157.19. If this could hold, maybe there's an upper channel to build a little floor to absorb this move to then give you better action here. But that's a big if. We'll see. What would be a step in the right direction? Well, maybe a close above yesterday's high, and then there's room back to this area. But we'll see. I'm not going to overtrade it. Sometimes when you're trying to forecast a trade, it's better to be small versus a level to then really see the clarity, because if you get too big, you're not going to be able to sit there. The banks have been fantastic. They reported earnings 2-3 weeks ago, or maybe even 4 weeks ago. I don't remember. All I know is, I come up with post-earning strategies to try and be in swing trades. So when JP Morgan reported a great report, the strategy was be long versus this level. So this way you're long versus support, and then maybe you could add on strength, and it wound up being phenomenal. So what did JP Morgan do? JP Morgan right here was that strategy. Reported earnings, went sideways. This was 117.99, so some guys put that on as a swing trade, and then others, added when it took out this pivot, and then all of a sudden it's hit a high of 130.129. So for me, I've been kind of cute. I've been selling calls as these things get extended. I don't like to sell calls on, small names that can get taken over, or bios or whatever. I sell calls on very thick names, sometimes ETFs that I think are extended. Instead of shorting it for acute cash flow, I go out a few days, if it's in the direction of the move, and I collect some money for premium. So what did I do here with JP Morgan? I sold the 132 calls. I added here. That was a little tricky. I actually tweeted that out to, the Twitter sphere. And now at this point, I feel safe that by tomorrow, it's not going to be above 132. So those calls that I sold for 40, 50, 80 cents, I'll keep. And that was just an extra trade in my portfolio approach. I like to have a lot of things going on. So with JP Morgan, I was selling the extensions, but on a different note, because JP Morgan had such a clean breakout above a 2-year range. Look how clean this breakout was. You go like this. 2-year range, boom, first time it failed, came back and got everyone away from it. Then all the people who lost money in this failure didn't trade that one. So anyway, after that, I was like, oh, look at Bank of America. Bank of America had a solid report. I'm going to ride this one and be long it. Buy dips, sell strength versus, what I was doing with JP Morgan. And I even tweeted that to the public Twitter sphere saying I'm going to hold it because I think it gets to 33 plus. It went to 33.60. Bank of America, this was 33. That was my target. This circle is when we got long. I did not get that long down here. It was post earnings, verse 29.50-ish, and then we had a nice move to 33.60. So anyway, I use a tier system, so I did tweet to Redler All Access. I'm getting smaller into like 33.40, so this way I could buy a dip. And yesterday, I added to my Bank of America. I added here, right around 32.50, not the low. I know you don't need to get the low. It could even see 32.20-ish. But if you sold mostly strength, yesterday I bought some in the hole, I trimmed some on the bounce, and today I'll do the same thing. You have 32.48, and then this is like 32.20. I'll buy small Versat, and if they shake the tree a little bit today, this will be the spot, because the banks tend to be a little trickier, and the 21 day is still very good support. So, I'll do that I'll do very small. So as far as my go-to list, which is usually FANG names, high beta tech, semiconductors, this and that. I'm not that in love right here. Sometimes there are tight patterns and I can't wait to get into tier 2, tier 3. Sometimes I like to take 3-4 day trades, sometimes month trades. At this point, actually yesterday I did something that I haven't done in a long time. I actually shorted Apple. I didn't short, I sold the 267.50 calls for like 50 cents because guys like, oh, look how extended Apple is. You've been riding it since 2:30. I actually sold it yesterday. So I'm like, hey, you know what? It's Wednesday. It's strong. It's 264. 3.5 points. Maybe I can make some Q premium. Anyway, if you guys remember, wow, what a friggin' awesome trade this was. This led the market to highs. It's been above the 8-day moving average for so long. Remember this red dog reversal right here? This was a major inflection point in the chart. But anyway, last video I did on a Twitter video, if you remember, was the day after earnings. I don't like to do, trades into earnings because you never know what's going to happen. You trade it after earnings or the day after. So the day after that Thursday, I wish I had more views, but we had like 12, 13,000 views. I'm like, guys, we could buy it. If it's any good, it's going to hold 245, or you could do it versus a 30-minute low, and then we could add to it when it took out this pivot. So this was that day. This tail still shouldn't be here. That was an out of sequence trade. 245 was a prior day's high. It held it. I think it didn't even get to 240, a little less than 246. I held it, so the VTF saw it, so they felt confident to hold it. And then the next day, I even tweeted I was trading out of short hills. I'm like, it gets above this 249.75, it's going to go. So you could have even added right here, which is the pre-earnings high, and it took it out. Then it held again, and all of a sudden, look at this move to 264.78. And look, above the 8-day moving average the entire time. We did this a few different times. There's been so many nice 3 to 4 day trades in Apple. 3 to 4, day holds with day trades. So anyway, I am not long Apple this second. I sold it yesterday into this move, and I sold, if you see the VTF, you'll see I'm short to the 267.50 calls. And so hopefully today, tomorrow, it takes a day off. Keep the premiums, and then maybe we'll see if there's another strategy. At this point, this is upper support. This is what? This low here is 261.07, so you can move this up. I might not even trade Apple today. I don't know. It's down like $1 pre-market. It's not really that compelling. Sometimes it's compelling, sometimes it's not. Now that it's down a little bit, maybe it goes green for a trade. What I wouldn't do is I wouldn't be adding above a high. I like to add above a high sometimes. Like here was great. I was long it this day and that day and added above this level because it was ready to go. So, I did that here too. But here, as it's extended, I just think you need to be a bit more careful. This is, the end of this name. This was from yesterday. And so Apple, sometimes there's just less to do. Listen, there's less to do in Microsoft also. The same day I did the video about Apple, I explained, what I was doing with Microsoft, which was the same thing. I bought Microsoft the day after earnings, not into earnings, and said, hey, if it could hold the gap, pivot from earnings, it could be a good swing trade. It's calculated. And Microsoft was fantastic. I'm still actually long Microsoft. But, that strategy was right here. Guys like, how do you make really good money during earnings season without taking binary risk? Well, sometimes you could take options. Risk is premium paid. And sometimes you could buy versus a level. And look at this. This was 138.67. I bought this day, which I got a little lucky because that was, I actually bought after hours Thursday, when something report, I think Amazon reported Microsoft was lower. I'm like, Microsoft already reported, I'll buy it 50 cents lower, and then I added the next day. But anyway, then all of a sudden they got the cloud contract from the government, sold into some strength, was buying in here. I think somewhere around here I tweeted saying, hey, I'm long verse 142.60. I didn't come up with that pivot out of my tushy. I came up with it because that was the gap, and I said if it's going to be special, it's going to hold. And it wound up holding, and I said we could add above 145, and he had a nice add, and now it went as high as 147.57. So nice move for Microsoft. Remember when they said that's where money goes to die? If you Google, I had a huge, segment on Microsoft when it was in the decade channel. But anyway, that's different. So now I have less on. I'm still in it. I've been carrying it from here. Yes, you could be an active proprietary trader, have risk define and hold names, not just day trade them, and then you could possibly day trade for cash flow around them. So I'm still in it, and I might not even touch Microsoft today. It's down 25 cents. It's not compelling to me. I'll maybe let it test this 146 area or so, and maybe I buy some more, let the 8-day catch up. It's a little extended. I've also been talking about Tesla. Wow. Tesla, I put a calculated call spread on. We made over 600% in it, but even better than that, it was a great trade post earnings. So this was, kind of lucky. But then the report, the results were so strong that after this doji, look, pro earnings gap. It gets above a pro earnings gap pivot, it continues. So here was Tesla the day after earnings. You had 289.29 to trade against, took out 304.93, and boom. It was a great day trade besides the options. And right around here, after putting a high in and a little extended from the 8-day moving average, I put another strategy saying, hey, I'm going to buy verse 309 because that was support, and add, if you can get above and stay above 320, it was 319 or 323, and then you had another push. So not yesterday, the day before, I did tell everyone, I'm out of Tesla for now. It's a little extended. I should have some just in case. And then all of a sudden yesterday you had the reversal, hit 356, went back below here. Some guys made money short. I did not. And now the 8 days down here, 335, 341.50 is a prior pivot. If it were to see 341.50 today, I'll start nibbling back because that'll be about $14 off of yesterday's high, and I think I can handle that. And then let the 8-day come in. If it's down $1 and reclaims 345.18, which is yesterday's low, maybe there is a room for a push. But I don't think it's going to be like a crazy move. So with that being said, I'm not short. I'm out of it. I took another 20 points out of the swing trade besides the options and whatever. I personally think, this is a thought, that it could see all-time highs, especially if they have another quarter like the last quarter. So if this is going to look a little noisy, but I just want to show you that. So I think bigger picture, okay, which is just a thought, that at some point, this big 380 level, it's going to take it out and it could be 400 plus next year, especially if it continues to make traction like this. So I'm going to try and stay with this. You know what? The beauty of a go-to list is, literally during this whole time, I never really even traded. I didn't really even talk about Tesla until it got back in a new active sequence to see if it could be special again. And it's been very special. And now we'll see what kind of what kind of corrective phase happens after a big move like this, after an engulfing, red dog reversal sell yesterday. Maybe it's nothing. Maybe it just goes green today and sits for a day or two. We'll see. But I'd like to buy it back a little cheaper. So I do mention the word active sequence. Usually, it needs a day one to start, and then you need to see commitment to it in order to stay with it. And then sometimes it'll go a few days, sometimes it can go weeks like this. So 2 days ago, I bought back Facebook for the first time since earnings. Why did I do that? Because I like pictures of my mom and my dad, which I do, and because I use Facebook, which I do, but not because of that, because it was a day one, first day one in a while. So if you look at Facebook, you had a day one, it had a little bit of a bottom tail into the 21 day. At post earnings, it was sold, so it was just drip, 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 and then boom. Yesterday, it did do a little bit of a red dog reversal sell, so I did reduce a little bit. So I'm not even like in a tier one. I'm just in some to see if I could engage it a little bit more. And now we'll see what happens today. Yesterday as low as 192.74. Visually, this is what I want to see. Here you have a little descending trend line. I'd love to see it hold this, build an inside flag here, and then go again. Okay, all started from a big day one. So that's why I'm in it. If it breaks below 192.74 and all of a sudden closes below 191 and gives back more than half of that big day one, then I'll probably be stopped out. I'll lose a little bit of money. I'll say, you know what? It was choppy. It's not worth my time. It's not special. Right now, it's like kind of fine and in the game, but it's not special yet. If it holds here, goes sideways, shows some relative strength today, and goes green and hangs there, and then takes this out, you know what? Hey, maybe we could ride a move in Facebook above 198 all the way back to all-time highs. At this point, I don't know. All I know is, earnings are out of the way. They were pretty good. You had a big day one. Can it show some commitment to it? So that's my thought process. Amazon's been horrendous. I tried it last week. I got stopped out. I haven't revisited it since. Amazon, I was in it in this spot. I thought maybe it would clear this descending channel. It did. Went to 815, then couldn't hold 1802, got out of it, and all of a sudden hit 1747 yesterday. The results weren't great. I know we have the holiday in front of us. I'm sure they'll have a lot of hot devices like the Alexa, this, that, boom, bam, but it's not acting well. So I'm trying to just glance at it, but not overtrade it, because lately when I force to trade in Amazon, I'll lose money. So I'm just watching it. Google also did give some guys a trade through 1300 to 1322, but it's kind of dealing with the medical data noise of this to that. I think most guys got stopped out that are actively here. Yesterday's low is 1292. For some reason, I think it's going to get down to the 21-day. I'm not shorted. I'm not long, and I'm watching it. Google, to me, I have success very limitedly. If that limitedly, is that a word? Here and there. So at this point, I'm just watching it. I'm not really enamored with it. What's been great, Roku was a great trade for us this week. Monday, Redler All Access. I'm like, guys, I think we're going to fill that gap from earnings. So maybe it goes red to green and then pushes above this pivot, and then woo, did it do that? And then it went further than I thought it would. That was right here. So on this day, it was lower. It went green and then took out this pivot. It was closed strong. I went home long that night, and then I sold it into this move. Okay, I did not play it yesterday for that. Okay, now it's 4 days up into a descending trend line. This would be fantastic if this could, hold here, go inside a little bit. I do think, I actually think there's a chance it makes an all-time high. Maybe not this year, maybe next year. All I know is that this story is far from over, and little inside action. Then 142.45 is that spot. Just because it's a little overbought doesn't mean it's an easy short. I think guys were trying to short it yesterday and they got their butts squeezed off. I'd like to see a little inside action and take this out, and then your next area is really 151. Gap's already filled. Whenever a gap gets filled fast, that shows you that gap is meaningless. If a gap gets protected and it can't get filled, then usually that means it's going to stay in the direction of that. But anyway, pretty tight pattern here into resistance. I would think it holds, it just stall, just not even so, just stay put for like a day or two, Roku, so then we get a better platform to buy from. Netflix, it got hit with the Disney Plus news. It looked like it was trying to be a better active sequence since earnings, but then yesterday, any active guy that I know got stopped out. Where'd they get stopped out? I think, what was it, 285 or 287, I think was the number. Yep, right here. So remember this pro gap that didn't get filled, led to lower prices. Well, anyway, earnings happened. It was sold, came in, cleared 275, was looking decent in here, but then yesterday took out this range, closed below 287. So if you were looking for better prices, that was your time to get out, take a small loss, move on. And it's still kind of above this small ascending channel, but below the moving average is very wishy-washy. I had some options earlier in the week that I made some, and then I broke even. I got out of the way. I'm like, you know what? I'm just going to watch it from. It's just very hard. Netflix has been very hard. It's been very hard since the false breakout up here. And I actually lost money up there. I was like everyone else thinking it was going to break above 385, and then that happened, and then the bad earnings happened, and then here we are. It happens. Anyway, not much. This more looks like a bear flag before going lower again, but we'll see. So, listen, everyone's like, Red Dog, you got so lucky yesterday. I'm like, why'd I get lucky? They're like, well, you bought Disney versus the pro earnings gap, and look what happened. It went up $10. I'm like, yeah, but you know what? If I was at my seat like DP and some of the guys, I probably would have been buying it through 140 and a quarter, because that was the post earnings pivot candle, and that would be the ad, and I would have made more because I had more shares versus just being in tier 1 Versa level. So what do I mean by that? You go to Disney, okay, same like I showed you in Microsoft, same way I showed you in Tesla. It happens in New York Stock Exchange stocks the same way. Okay, here was your earnings move. It came in. This day put a pivot in 136.21. Some guys got a long verse that. So yesterday, I'm like, hey, let me be long verse 136, because I know I'll be buying it above 140 and a quarter if it happens. And then I was in here doing my midday report. News came out with the Disney Plus, and boom. I think if you were watching, you saw my surprise. I'm like, wait, what just happened there? Anyway, what a nice move. So I'm still in some. Some guys like, hey, how does this stay special? Like, what does it need to hold? Sometimes what I would do is I go to the one day and say, hey, where was Disney yesterday? Where did it find intraday support? So I would say in order for this candle to like really show power and get continuation, it could stay for a day or two. I would think it would hold this 145, 146 is where maybe, if you sold some strength and it hits there today, you buy some back, let it hang here, and then if it happens to take out, the 149 and change. So this is like the top third of this candle, not even half. Then maybe there's another move. Anyone? I guess there are actually some people short Disney, believe it or not. Anyway, not us. But what a nice surprise. And again, in this business, if you're in this business, you're allowed to get nice surprises. If you're up every day at 4:45 and you're putting in the time and you're doing the right strategies and you're doing the high probable trades, every now and then this happens. If you're at the movie, if you take tickets at the movies, you get to watch some free movies here and there. If you're a contractor, hey, maybe you know how to redo your bathroom without hiring someone, which I always have to do. But so if you're in the stock market and you have good strategy, sometimes things work. Like right now, I'm not sure what's happening with Ameren, but it was calculated. Guys have been talking about it for a while. There's this huge channel here. So I knew that they were coming up with some kind of data on Thursday, which is very important. So I actually bought the options here. Okay, I bought the 19s. And then even on this day, I bought the 23s because that's a big level. And, it'd be nice if they get approval and it opens up $10, we'll get paid. If it doesn't and it comes back in, then those options will be a zero and it's the cost of doing business. But I'd rather have options because risk is premium paid. So at this point, there's been, the Baker brothers has been pouring into this damn thing. So, I feel like if it gets above this, like I said, it can get silly. So I already sold some calls because if it was just a normal name, I bought the calls on this day, and then that happened. I made like 100% on them, so I got to take some of them off. So I took off 2/3 of those, and I have the 23s, which were more of like a lotto call, and maybe it's huge, or maybe if it gets halted and opens below 12, it doesn't matter. My risk is premium paid. But again, this is a setup, and I like setup, so I play them. We'll see. Same way with this CLVS. I don't know that much about it, but I know that guys were talking about how, first of all, it was this was like look at this stock. Then back in 2017, this was like a $70-some stock. So, people did make money with this, and they have, old, memories. Went from being maybe a bankrupt story to saying, hey, the drug works, it's going to be reimbursed. So to me, I was like, I missed this move. I saw it flag. I bought a little bit yesterday. I added here. And now I have some. So, to me, why wouldn't it fill this gap or at least see $12 maybe into next year? So I'm going to try and maneuver it. I'm not a biotech specialist or a cancer, product specialist. That's why even on Twitter, I'm like, hey guys, what's the real color here? Because sometimes instead of just taking a trade, like yes, it was a great trade. It was up 18%. I'm like, maybe I should stay with this thing considering it was it was just in the teens and it was an $80 stock 2 years ago. Maybe we could ride this thing, learn how it moves and stay with it to at least fill this gap, if not higher. But we'll see. So my stop on this is here. If it's any good, it shouldn't get below this spot here, which is not even 5.25. I think you can even give it a stop at 560. And we'll see if it gets above yesterday's high of 680. I might even add for a push. But that's my thought process. I have to have a thought process on all that I'm doing. And as you can see, I'm doing it all over the place because, you could have setups all over the place. And then that's that. The videos coming out with earnings tonight, I really don't have, a big, I'm not going to take options into it, but overall, guys have been riding this trend. This is the recent high after hours. If the report's strong, it gets above and stays above 211. Hey, 220-ish is next. There's a gap to be filled up to 230. So listen up. After there might be an after hours trade. If it's light and it misses, hey, it just came from the lows. It's been kind of broken. But if it gets above and stays above 211, maybe 220 plus. I'm not taking options. Yesterday, guys were so upset about SWKS. I'm like, hey, see if it holds. I don't even remember the level was, but it was like this level. This was from yesterday. I'm like, see if it holds the gap. Look at that. Came in, rallied all the way back up. So at least it's good to know where a gap is, where moving averages are. I didn't play it, but I put it out there for guys that do. So sometimes I'm just your offensive coordinator. Sometimes I'll run the routes and I'll run the plays. I do trade for a living. I do wear a lot of hats, and sometimes I'm tired. I wake up at 4:45, and I'm writing my note. I'm doing the video like this. Hey, now right after the video, it's 8:26. I'm gonna post 15 to 20 charts, in Redler All Access, all with an active plan. So this way people could see the chart, see my active plan, and have a visual. And then at 9 o'clock, I can go sit at my desk and put my radio on and talk to the virtual trading floor, tell them what I'm seeing, what I'm looking at in the beginning of the day, and then I'm talking about what's happening the first hour or two. Everyone's listening, and then all these traders from around the world are also talking about what they're seeing, what they're doing. It's fantastic. By 11:30, I'm like, kind of spent. So I put some stops in on existing positions. I put some stops in on new positions. Maybe I put some orders in, higher, this and that. And then I go to the gym because I need to refresh my thinking, my head. By that point, I can't even think straight anymore. So sometimes guys are like, hey, Red Dog, you're going to miss something at lunch. You know what? I'd rather keep my sanity, and I'd rather, I've been doing this for 22 years because I don't sit at my desk between 11:30 and 2 sometimes. Yeah, I'll be on the treadmill. I'll call trade support. Like, hey, put an order out here. Oh, I just saw this happen. Buy this there. But I'm also, on the stand machine doing my thing. And then I come back 2:30, trade the close, do my recap, and then I try and get home to, coach lacrosse, basketball, whatever it is that I'm doing that night. And then I do it every day. And that's my process. That's my routine. And that's what you have to have, a process and a routine in order to be successful. And you need to like it because you're going to do it every day. This is not a, a glamorous job the way people want to make it out. It's a grind. It's a day in, day out grind. And if you do it and you do it with a smile, you can make some money and you can have a nice life and you could call the shots and you can do it from anywhere in the world. So with that being said, hopefully you liked the morning call. I definitely have 10 other names or 15 other names that are on my note that I didn't go over here. I'm sorry that I don't have anything that's jumping at me that I want to, I can't wait to buy this. Some days there's like, wow, I'm so antsy, I'm getting involved. And some days I'm like, let me see how the day evolves. I'm not so excited, but then things pop up. And then if things pop up, you're prepared for them. So with that being said, my name is Scott Redler, Chief Strategic Officer at T3 Live. Sorry that I'm a little, unshaven and this and that. That'll happen in noontime. If you want to catch me on Fox Business on Mondays, every Monday at 3:05 with Liz. I love being on with her. And you know what? Have a good day. And tomorrow's Friday. And good luck trading. And you'll see some charts coming soon. Bye-bye.